What's different today is coming out of the crisis, what you've seen banks do in many ways is go back to their basics or go back to the areas that they believe they've got a competitive advantage. And that competitive advantage is oftentimes steeped in scale. And when we think of scale, and whether scale's in your markets business or your banking business or your lending business, in today's age of slower growth and more regulation, if you don't have scale, the odds are you can't buy it, right? You're not seeing big banks get bigger through acquisition. You've got to build it. And in slower growth, that's tougher to do. And so what we've seen is the industry in many ways pull back to areas of strength, areas of scale, and you've ended up with very different business models, which in itself is far more resilient. So we can use different examples of firms out there in terms of how they change, but when we look at Citi as an example, I can tell you the things that we're not today. We're not an insurance company. We're not an asset manager. We're not a hedge fund. We're not any of those things. We're simply a bank.